You're watching Mirror 7 News. Stay informed, stay ahead for more news.
The crypto market has been back in the spotlight after the U.S. Federal Reserve made its latest move on interest rates. A 25 basis point cut brought the benchmark rate down to 4%, and that signal of a more dovish stance appears to have given major cryptocurrencies the momentum to push higher. Bitcoin, Ethereum, Dogecoin, XRP, and Solana were all seen grinding upward, with analysts suggesting that a path toward fresh all-time highs might be unfolding. Bitcoin, the largest cryptocurrency, climbed past $117,900, its highest level since mid-August. This move ended a period of sideways trading and marked a continuation of the slow recovery from early September lows around $107,200. Ethereum also gained ground, adding about 2.7%, though it remained stuck in a narrowing trading range that has lasted several weeks. Despite that, optimism has been building, with many expecting ETH to eventually test the $5,000 mark if market conditions stay supportive. Some of the standout performers were Dogecoin, Solana, and XRP. Dogecoin jumped over 10%, while Solana briefly topped $245 before easing back. Excitement around Solana has been partly fueled by CME's announcement that it will begin offering options on SOL and XRP in mid-October. These developments are being interpreted as a sign of growing institutional interest, since such instruments allow bigger players to manage exposure more effectively. Strategists believe the Fed's willingness to accelerate easing, if conditions demand it, could create what they describe as an asymmetric setup for Bitcoin. In other words, downside risks may be limited, while the upside potential could be significant. Some even predict that Bitcoin could break through $124,000 by the end of October, pushing into uncharted territory. But the story isn't entirely one-sided. The US dollar, tracked through the dollar index, that is DXY, has shown surprising resilience. After briefly dipping, it bounced back above 97, suggesting that foreign exchange markets may already have priced in the Fed's dovish stance. A stronger dollar tends to work against risk assets like cryptocurrencies, since it tightens financial conditions and can cool investor appetite for speculative plays. Fed Chair Jerome Powell added another layer of caution by emphasizing that rapid successive rate cuts aren't guaranteed, and quantitative tightening remains in play. Inflation also continues to run high, which means the central bank might not be as aggressive in easing as some investors hope. This tension between dovish projections and dollar strength could shape the crypto market's direction in the weeks ahead. Meanwhile, sophisticated traders have been preparing for unexpected shocks. Demand for tail risk protection, which guards against low probability but high impact events, has been rising. Block trade data even revealed a notable put spread order designed to profit if Bitcoin's price were to tumble, reflecting that not everyone is betting on smooth sailing. For now, though, the tone in crypto markets remains cautiously optimistic. The Fed's rate cut has lit the spark, and investors are watching closely to see if that momentum can carry Bitcoin, Ethereum, and other major tokens toward new highs before the year ends. Stay subscribed for more videos.